Peloton is replacing its CEO and slashing thousands of jobs. Changes the exercise bike maker announced on Tuesday as it wrestles with weakening demand for its at-home fitness equipment. Co-founder John Foley will step down as CEO and will become the executive chair. The company named Barry McCarthy, a former CFO at Spotify and Netflix, to take over starting Wednesday. The executive shuffle comes after Foley fought a boardroom brawl with activist investor Blackwell's Capital as Peloton struggled to maintain the meteoric growth it saw in 2020 and 2021. Shares have since tumbled nearly 80%. Blackwell's pushed for Foley's removal and even urged the company to sell itself. Last week, Reuters reported that Peloton has drawn interest from potential buyers, including e-commerce giant Amazon.com. Peloton said it would also cut roughly 2,800 jobs, affecting 20% of its corporate positions. Shares of the company rose 10% in early trading on Tuesday.
Shares of Pfizer fell on Tuesday after the drug maker's forecast for this year's sales of its COVID-19 vaccine and antiviral pills came in below Wall Street estimates. Although Pfizer raised its forecast for the vaccine to $32 billion, it cautioned that final sales for 2022 may not top that figure. Last year, the company increased its COVID vaccine sales forecast several times as it signed more deals to supply the world with its shots. But Pfizer said its COVID-19 pill Paxlovid looked more promising, saying that sales forecast could increase. It expects $22 billion in sales for that treatment this year. The company expects to produce at least 120 million courses of Paxlovid, a two-drug regimen meant to be taken at home, and is selling the treatment to the U.S. government at around $530 a course. Overall, Pfizer expects sales to hit $98 billion to $102 billion for the year, which was also below the estimates of analysts, who expected Pfizer to make more than $105 billion this year. In a research note, one analyst said it's unclear whether sales from Pfizer's COVID-19 products are sustainable in the long term.
The new manufacturing facility of tritium that's announced today is more than just great news for Tennessee. Yes, it's going to create more than 500 good-paying jobs in Tennessee, but it's going to deliver greater dignity and a little more breathing room to workers and their families, and it's going to have a ripple effect beyond and far beyond the one state. This is great news for workers across the country, for an economy, and frankly, for the planet. Tritium's new facility is going to produce up to 30,000 of these chargers every year. They'll use American parts, American iron, American steel, and they'll be installed up and down the highways and corridors in our communities all across the country by union workers from the IBEW and the Electrical Workers Union. So the benefits are going to ripple to thousands of miles in every direction. And these jobs will multiply in steel mills, small parts suppliers, construction sites all over the country in the years to come. And it's going to help ensure that America leads the world in electric vehicles. China has been leading that race up to now, but this is about to change.
SoftBank Group has shelved plans for a blockbuster sale of chip designer ARM. It was due to be bought by US firm Nvidia in a deal valued at up to $80 billion. But now SoftBank says there are just too many regulatory hurdles in the way. Watchdogs in the UK and EU were scrutinising the deal, and the US Federal Trade Commission has sued to stop it, arguing it would hurt competition. ARM's chip designs power Apple iPhones and nearly all other smartphones. The British firm was acquired by SoftBank in 2016 for $32 billion. Now the conglomerate faces disarray over its attempt to raise funds. News of the deal's collapse came the same day it reported a 97% plunge in profits, hit by falling share prices for many of its big investments. But SoftBank chief Masayoshi Son put a brave face on the change of plans, saying ARM will do a share sale instead. Son says it will be the most significant IPO the chip industry has ever seen. New ARM CEO Rene Haas says the firm is excited to be publicly listed again. Sales at the chip designer surged 40% to $2 billion over the 9 months to December.
Stocks finished higher Tuesday, reversing early losses with a lift from Apple and Microsoft, while a jump in the 10-year Treasury yield elevated bank stocks ahead of a key inflation reading this week. The Dow closed up 1% higher, while the S&P broke above the 4,500 level, and the Nasdaq finished more than 1.25% higher. Sam Stovall, chief investment strategist at CFRA Research, said investors are bracing for the latest U.S. consumer prices data set to be released on Thursday, which he expects to come in at 7.3%, what would be a 4-decade high.
I think that if the number is not as bad as we think, then I think we do end up with a relief rally. Maybe today's market action is an implication that many people feel that CPI will come in a little bit lighter than currently anticipated. So people are buying in ahead of possibly a better than expected number.
Earnings were mixed on Tuesday, with Pfizer falling roughly 3% after forecasting full-year sales for its COVID-19 vaccine and therapeutic pills below analyst estimates. Amgen surged close to 8% after the company announced a buyback of up to $6 billion and forecast earnings would be more than double by the year 2030. The spotlight stayed on Peloton as shares soared again on Tuesday, after the exercise bike maker said it would replace its CEO and cut jobs in a bid to revive sagging sales, on the back of news that Peloton was a possible takeover target, with Amazon, Apple, and Nike reportedly in the hunt. And Facebook owner Meta Platforms saw its 4th straight day of losses since a bleak outlook erased about a quarter of the stock's value last week. On Tuesday, Meta's market cap shrank further after billionaire and early Facebook investor Peter Thiel decided to step down from the company's board.